Hey, are you a dentist? If so, you're going to want to hear this. Did you know that if you had $500,000 in your savings account last year, that you lost $35,000 due to a thing called inflation? That means that $500,000 now has ability to only purchase $465,000 worth of goods and services. This year, the consumer price index was over 7%, which was the highest rate of inflation in over 40 years. In fact, other indices measure inflation at well over 15% this year. You've seen it all over the headlines. Prices of everything are going up around us. Well, at least most things. And most economists widely agree that inflation is not going anywhere, at least not in the short term. So we as doctors, we can either bury our heads in the sand and hope that this thing that we keep hearing about inflation goes away, or we can choose to educate ourselves, learn the factors that drive inflation, and what you can do to combat inflation. In this video, we are going to teach you the strategies that you need to protect yourself from inflation. These are the strategies that have been used by the wealthiest families in America for generations. And now these tools are going to be available for you. On this channel, we teach doctors and high net worth professionals how to build income replacing cash flow, as well as generate millions of dollars of wealth by investing in real estate completely passively. Real estate has created more millionaires than any other business out there. So by investing properly, you too can create a life of freedom, full of value, where you reach your true full purpose. There's no need to reinvent the wheel. We are in a position as high income earners that just by doing simple things consistently in a focused manner will lead you to the desired results while keeping risk very low. Investing heavily in real estate over the last 10 plus years has allowed me to take a giant step back from my clinical practice to working part-time. I spend tons of quality time with my wife and children, as well as take 6 to 10 vacations per year. It also gives me the flexibility to do my true passion, which is investing in real estate and educating my fellow doctors on how they can do it also. Now, one of the persistent headlines over the last few months has been the rampant inflation in our country and in our economy. In this video, we are going to discuss what inflation is, why it is important, and most importantly, what it means to your bank account. Last but not least, we will teach you how you can hedge against and beat inflation using the strategies used by millionaires, decamillionaires, centimillionaires, and even billionaires like Sam Zell. Now, before we get started, tell me a little bit about yourself. Are you a dentist? Are you a doctor? Maybe a lawyer? Are you new to investing in real estate? Let's continue this conversation in the comments below. Now, let's get started. Now, what exactly is inflation? Inflation refers to the general increase in prices of everything around us in combination with a fall in the purchasing power of our money. In other words, our money buys less things over time and time. We can afford less and less. Inflation has not been a topic of discussion or concern or worry for anyone in this country for the last 40 years because inflation has been relatively flat. It's been 2% or less for the last 15 years. And having a little bit of inflation is a healthy thing for any economy. But when inflation gets too high, it starts to have negative effects. The main things that drive inflation, at least in this bout of inflation that we're currently having, is raising high prices in energy, food, used cars, furniture, computer chips, housing, rent has gone astronomically, right? These are the type of things that are very susceptible to inflationary pressures. This is kind of what inflation is, right? Now, what actually causes inflation? What causes prices to go up? Some of the main things that people say is that COVID continues to wreak havoc on our supply and transportation chains, right? Because when we have all these shutdowns and factories are shut down, people aren't working, and certain components that are needed for building cars, for example, computer chips. Now all of a sudden we have a shortage of computer chips, and now the cars can't be made, and cars are just sitting in port waiting for these chips to be made, right? That's supply chain crimps. So shortage of supply is definitely a problem. shortage of labor scarcity, and as a result, rising labor costs, right? Anybody here that owns a business knows how hard it is to retain staff and how many incentives and high price per hour we have to pay them to retain good employees. Increased consumer demand. People had pent-up demand during the pandemic. We weren't buying, but now restrictions are starting to lift in some areas. People want to travel, people want to buy goods, people want to buy cars, and demand is increasing. Supply of products is decreasing, and shortages of labor. Then to add more fuel to the fire, the government has printed trillions of dollars over the last few months. We have 1.8 trillion more dollars to be printed this year alone. So that's adding gasoline to a fire, essentially. So as a result, when you look at these things, shortages of labor in America, supply chain crimps because new COVID variation possibilities that come. These things do not have a quick fix. As a result, inflation will persist through the end of the decade. Almost all economists will agree with that. There are economists that are contrarian to that, but vast majority of economists will agree that inflation will persist through the end of the decade. So what's happening is that if our incomes are increasing at a lower rate than inflation is increasing, we are actually getting poorer. And unless your income went up 15% last year, you're actually making less money this year. Cash savers are taking a beating. Cash savers. We already talked about loss of purchasing power because cash is sitting in the bank not earning, right? If you have fixed equities, same thing. Imagine if you had a mutual fund or a life insurance policy which gives you a guaranteed return of 4%. 4% is okay if inflation is lower than that. But if inflation was 12% and your portfolio grew by 4%, you might look at your portfolio and say, oh, but it went up. It went up in nominal terms, but it actually lost. If it made 4% and inflation was 12%, it actually lost 8% of its value due to the crushing effects of inflation. Now, what is the solution? How can we fight inflation? Traditionally, the best way to fight inflation is to find investments that increase at a higher rate than inflation. Sounds pretty simple, right? The most predictable answer to finding a good asset class that exceeds inflation, and this answer may or may not surprise you, is real estate. Why is that? Because the first thing that goes up when inflation goes up is real estate. Let's take a look at why that is. In this country, there's a deficiency of 5 to 6 million apartment units. Now, what is driving this great increase in real estate prices? Well, it's some of the simplest ways to look at it is this basic supply and demand. Prior to 2019, prior to the pandemic, we were already in a crisis mode in terms of affordable housing or workforce housing. There's estimates that we're in a deficiency as many as 5 to 6 million apartments across the country. So supply is already low. So when you combine this scarcity of units with a high level of demand, because there's a lot of people that need a place to live, especially in the working force population, this causes rents to increase. And then when you add in the factors of inflation with wage growth and wages going up, and we get into a push-pull negative cycle where wages increase, rents increase, which causes wages to go up more, which causes rents to go up more. And when rents are going up, that means the underlying real estate values are also increasing. You got to remember, multifamily or apartment buildings are very different from single family homes, where the value is not based on what other homes comparable to it are sold for, which is how single family house worth is determined, but instead it's determined by income in apartment building. And when rents are going up, revenues are going up, profits, net operating incomes are going up, and as a result, property values are going up. And if you look, asset prices in this nation are soaring. When rents go up, cash flows increase, which drives up the net operating income, which drives up the value of real estate. But all real estate is not created equal. We here at Walk of Wealth are particular about a very specific niche of real estate called apartment buildings. Human shelter is a basic human need, and the demand for it never goes away, especially during bad times. This is called recession resilience. I go into much greater detail about what makes apartment buildings, or synonymously known as multifamily real estate, the best asset class. You can click on the link above to get that video. But the very wealthy and elite have been investing and hedging their vast fortunes against inflationary times in large multifamily or apartment buildings for centuries. Family offices, which range from decamillionaires to centimillionaires, have taken up huge positions in multifamily real estate over the last 2 to 3 years. And it's with good reason. And these people that invest on behalf of family offices are some of the most intelligent investors on the planet. Now, if apartment buildings or apartment buildings or multifamily real estate is such a great investment class, then why haven't I heard about it before? Why does my financial advisor tell me to take my 10% of my income, put it into IRA or put it in the stock market? Why don't they tell me to park it in multifamily real estate then? That's an excellent question. To be honest with you, before the Jobs Act of 2012, investments in apartment building syndications were only available to the ultra wealthy, and they were mostly handshake deals in country clubs. So most people don't have access to these type of deals. However, legislation in 2012 defined what an accredited investor and allowed those investors to now invest in this asset class, which was now not available to them before. As a result, there has been an explosion of interest in this asset class over the last 5 years. Some of you have probably had somebody approach you with an apartment building deal, or some of you may have not yet, as it's still in its infancy stage for accredited investors. But with this explosion of interest, now there's a whole bunch of players in the game offering these type of deals now. So it's very important that you pick the right sponsor to partner with, because real estate can make you a millionaire, but it can also leave you bankrupt and heartbroken. Just a word of caution there. Let's put the gloom aside here. Now, the reason that the very wealthiest and most intelligent investors are investing heavily in multifamily real estate currently is that when you buy an apartment building, when I say an apartment building, imagine a 100-unit apartment building where 100 people live there, and everyone's paying, 100 people are paying $2,000 a month in rent. Now, what you're getting when you're buying an apartment building is you're buying a cash flow machine that gives you predictable cash flows, gives you tax advantages, as well as gives you consistent double-digit returns through good and bad times. It greatly outstrips inflation. Why? Because when inflation goes up, wages are going up. People can afford to pay more for rents. Costs of everything goes up, so landlords raise rents. When rents go up, asset values go up. So as you can see, real estate is directly affected by inflation. That's what makes it such a great hedge. It makes cash flows increase and the values of the building shoot up. So as long as your invested capital is out earning rates of returns that exceed inflation, it will leave you above water. So again, decide what you want to do. Do you want to get wealthier faster as a result of inflation? Or do you want to bury your head in the sand and become a victim? The choice is up to you. For more tips on growing wealth for doctors, click on the next video.